All right, so we're back. We're going to look at trade performance. We just got finished talking about trade distribution, and we're going to approach this a little bit differently. In fact, we're going to tell you a story. I'm going to start it out, and then I'm going to pass it over to Barry to finish or to get into further detail. Once upon a time, there was a trade system that we wanted to backtest and analyze to see if it was viable. And we rolled the chart back to some random date. It happened to be September 28th. We set the chart up on the right side of the chart, just like I showed you in past backtest videos. Started clicking through and entering trades into a data sheet. In fact, entering the trades into the Ultimate Trade Analyzer. And so that's how our story begins, and I'm going to pass this off to our expert storyteller, Barry Miller, to show you what happens in the end.
Thanks, TJ. What we're going to do here is kind of show you how you could actually use this sheet as you're building your trade log and doing your back testing, and hopefully that will make some sense and you can see some of the value in here. So what we've done is we've taken the crude oil, we've basically put in about a week's worth of data in there. Okay, so we can see if we look over here at column V, the all trades. I'm going to scroll down through that, and what we can see is we miraculously got a bunch of winners, and our day points are all positive. So as I scroll down here, here's our second day, and we had 98 points. Here's our third day at 279. Here's our fourth day at 151, and our fifth day at 190 points. And we go through there and like, wow, this system had 5 winning days, had 100% winners, 796 points for the week. So we stop there momentarily and we go, well, what did my trade performance look like? So let's go over and click the trade performance tab. Now what we're going to, just before we go over there, what we're going to look at is some numbers that we see. I've already programmed in the start row at 30 and the end row at 63, which is the end of that first week. And we can see that this system made $7,960, had 30 winners, 100% winners, over here in the percent winners. Well, you're going to see we can't calculate a profit factor because the definition of profit factor says I got to take the dollars won divided by the dollars lost, and if you've passed, I think, about 4th grade math, you know you can't divide by 0. So we can't calculate a profit factor. We got more or less the same problem with the expectation. We can't calculate it because one of the numbers it uses is the average dollars won over the average dollars lost in its calculation. And again, we can see that the average dollars won was 265 per trade. That's pretty darn good. But we didn't have any losing trades, so we don't have an average dollars lost. So again, we'd be dividing by 0, so we can't do that, so we can't give an expectation number until we actually have some losing trades. Okay, great. Oh, another quick point is that 22% or 22 of these were long trades, 8 of them were short, so 73% were long, 27% were short. Great. Okay, let's go over and actually look at trade performance now. We've seen the summary, but how's this going to look on a trade performance chart? Now remember, we only have about a week's worth of data in there, so it's not a lot, but we're looking at this beautiful equity curve here. It's just going up at a 45-degree angle. Boy, you can't complain about that. Now this is the trade curve, and it's dollars, the dollars that the system won. Okay, let's slide on over to the performance indicators then and take a look at what these say. Okay, well, we know from looking we had on the data tab, we had 100% winners. Sure enough, over 1, 2, 3, 4, 5 days, this graph just validates we had 100% winners. It also validates that we have no profit factor that we can calculate because we had no losers, so the formula won't calculate anything. And then we can look at the average dollars per trade. That's average dollars per trade, not the average dollars won over average dollars lost. And it started building up here until it hit this peak of around $300 on average per trade, and then it started to fall off a little bit. So that's what the first week looked like. Now at this point, TJ is excited about his new trade system because he's getting such wonderful performance statistics, and he's going to decide to put another week into doing the back test on this thing. So we go back to the trade log. He enters a bunch of information, and now we're going to go to the end of the first month. So this is, I wrote all these numbers down so I'd have them. This is row 274. So we're going to go to 274. Okay, let's go look at some of the summary statistics real quick. We see that, okay, now the system's made $25,000, and it had 40,000 in winners over 14,000 in losers. The average win, dollars won, was 267. The average dollars lost was 231, so that's good. Our biggest loser was $380, but look, we had a huge winner up here, $1,530. We can see that we're now at about 70% winners, 30% losers. We have a profit factor of 2.71 and an expectation of 0.51. Okay, so let me make one more point that I don't think we've made in any of the other videos, and that is this system started with $40,000 over here in start capital. We know that the system generated $25,290 in profits. And then when we subtract our commission and slippage, the account now has $63,000 in it. Remember, 40 of that is starting capital, okay? And then this row right here, 5, H5, is our total trade costs over that number of trades, $2,247. Okay, let's go look at the trade performance graphs and see what they're telling us. Our equity curve is looking real nice. We have this little slow period here in the center of the equity curve, but other than that, it's steeper than a 45-degree angle, so that's really looking good. We have some small drawdown periods, but we're recovering out of them quite quickly, and the system is making us money. Let's go over and look at our percent winners, and we can see that, okay, we came off that high that first week of 100% winners, and it's unreasonable for us to expect that would continue for very long. The statistics says that it can happen, but we'll see we'll ultimately see where we stabilize at. Now notice that as we take additional trades, the blue line in the percent winners curve is starting to drop, and eventually after sometime in about the third week, it seems to get somewhat stable over here at around 68%. And that's what we want to see. We want to know where that system stabilizes at, right in there. And remember, these blue diamonds that we're seeing here is the weekly total, or the weekly percent winners for just that 1 week. So over here at the end of this first week, we had 100%. In the second week, we had 70%. In the third week, we had 59%. And in the fourth week, we had 64% winners. Now, those numbers can be both above and below that line, but what we want to, of course, see them do is cluster around that line and not get too erratic by dropping down or going, well, we'd love it when they go above it, but we don't want them to go too far below it on the weekly basis. Now when we look at our profit factor on the next graph, we can see it jumped around a little bit. Remember, it's got to stabilize somewhere. We got to have enough trades in there to see where the stability point is. 30 or 60, even 100 trades really isn't quite enough. There's some magic number out there that we need to get to in terms of the number of trades where the system finally begins to stabilize. And here we are over here in about the third week, and we seem to be stabilizing around 2.6, 2.5, somewhere in there. And again, the diamond or the triangles are showing us the weekly number for the profit factor. And remember, profit factor is the total dollars won divided by the negative of the total dollars lost. We can see that that's beginning to stabilize, so we're getting much happier with our system.